Hey guys, welcome back to another episode of Four Horsemen of Real Estate Podcast, where we're cutting through the noise and delivering real world insights. Now, speaking of real world, where in the world am I? And right now, I'm coming to you guys from Tobago, of Trinidad and Tobago, down the Caribbean islands, and we are here to talk about some groundbreaking news that's actually happened in Canada. We're going to talk today about syndicate mortgage fraud. Let's get started with the basics. We are talking about syndicated mortgage fraud. Most recently, there's been a really huge case that has come to the news. A syndicated mortgage, really simply, is when two or more people invest together to fund a mortgage. Usually, on these real estate deals that we're seeing, these deals are often presented as high return, low risk investments, mainly because they're talking about it being a mortgage. But far too often, these deals are actually sold based on undisclosed information, perhaps even not enough due diligence, and sometimes just flat out fraud. So, why do people fall for it each and every time? Mainly because on paper it looks good. You're told the project is backed by real estate, secured by a mortgage, and offers double-digit returns. Who wouldn't want that? But this is the dark side. In many of these high-profile cases, you can think of Fortress, who's in the news right now for hundreds of millions of dollars in fraud, or Tier 1. There's a number of other cases out there right now. The underlying projects were overvalued, poorly managed, or never viable in the first place. Some promoters actually paid investors using other investor money. This is basically a textbook Ponzi scheme. Now, some they'll misrepresent the use of the funds, while others just fail to disclose some of the conflicts of interest entirely. But many syndicated mortgages that are considered fraud are sold by unlicensed agents or brokers. In some case, they just slip through the cracks, and people are not aware of whether this person is actually a trusted, licensed professional in the industry. Okay, let me give you guys a couple of pointers when it comes to syndicated mortgage fraud. Whenever you're approached by someone that's doing this type of thing, you got to ask yourself, who's the developer? What's their track record? Is there an independent lawyer? Oftentimes, these types of individuals will try to push it through and tell you, oh, don't worry about it. You don't need to have a lawyer look at it, especially one that represents you. Is there independent review? Is the loan secured against actual real estate? What is the actual value of the property? Not what is the value of the property someday in the future after all of the work and renovations and building are going to be done? What is it worth today? So that you can get a true sense of the value and the risk that you are, in fact, applying into your investment. Now, why is this important? Because there are many opportunities, many deals where it is to your advantage to go in with a developer. And you know that the value of the entire investment is going to be produced by the completion of the project. That's a great idea. But you want to know the risk when you put your money in. If you can understand how a development project runs, then you can feel completely comfortable. But the reason that this case or these cases have been found to be fraud is because these risks were not disclosed to the investor. Now, on top of that, some of these guys were actually, in fact, embezzling money into other places, living lavish lifestyles. Meanwhile, that money should have been going to the actual projects, which is what people assumed was actually going on. So, are there safe, transparent, syndicated mortgages? Absolutely. And it's very easy to see. The documentation is easy to read. The entire deal is easy to understand because we understand a mortgage and you know what the value of the real estate is. In regards to this brown great breaking case with Fortress and the two main owners, they got some hefty penalties. Quite frankly, not hefty enough for a lot of the investors that lost hundreds of thousands, tens of thousands, hundreds of thousands of dollars individually, millions, hundreds of millions of dollars overall. Here's an important piece. When you look at documentation from these types of investments, they're very difficult to understand. Where's the money going? Is it going this way? Is it going that? You can't understand the flow of the money and how your money is actually protected. It just looks like everything is fantastic. Yeah, that's great. Now let's move on and let's party. Let's have a great time. Meanwhile, they can't explain the actual deal in simple terms. And so with Fortress specifically, and I can give you an example because I know of one of these projects directly, not because I invested my money in it, but rather because I was involved afterwards when there was a disillusionment of one of their developments and it had failed and it was running into continued costs, continuing to lose money. They were trying to look to someone to buy out this investment. I can tell you with personal knowledge that there was one project that they had where people were investing money into that project based on a future value. Meanwhile, they had not even completed buying all of the land where the project was going to be built on top of. Guys, I'm talking about craziness here. We're talking about five pieces of land that are supposed to be side by side, and they've not bought the piece of land that's in the middle. Meanwhile, they are collecting hundreds of millions of dollars to go towards that project. In that case, it was actually tens of millions of dollars to go to that project. And then everyone was going to be making a great amount of money after it was done. Well, if you don't get that piece of land in the middle, you never have a project in the first place. But they were selling people lies. And so this is really what this is all based on. And so now in the mortgage industry, we have something called syndicated mortgages and non-qualified syndicated mortgages. And non-qualified is when money is being used to pay for development costs, to pay for people, paperwork, administration, all of these different types of things, as opposed to the actual loan being registered against the property and a value under 100%. That's really the basis of it, guys. At the end of the day, what these and others do is they lack transparency and they're really trying to do one by you, hoping that you don't look into it. It's important to get educated. It's important to make sure you know how these different details work. If you have some questions, send them on in. I'd be happy to answer those questions. But make sure you understand how investing works because there are many deals that aren't risky at all. It's the investor that's risky because they've not educated themselves. We want you guys to be educated so that you're making great money, great decisions, enjoying your life. And I enjoy my time with you guys, even here while I'm in sunny Tobago of Trinidad and Tobago. That's another episode of the Four Horsemen of Real Estate Podcast.